Welcome to the Scaleup Valley podcast, where we bring the best tech leaders in the world to help you scale from 2 million to 100 million ARR. Today we have a very special guest. His name is Donald Stalter, the partner of Global Founders Capital. Donald, welcome to the show.
Hi, thank you.
And Donnie, you have an amazing experience. You are early stage investor. You were the co-founder. You co-founded the City Deal. You exited City Deal to Groupon. Then you have been setting international offices for Groupon as VP of International, the European office and the Asia office. And you also led business development at Airbnb globally. And you have also launched multiple offices again, and you have advised multiple early growth efforts, namely at Andy. So it's really an amazing experience, and it's really a pleasure to have you on the show. How did you win that Global Founders Capital?
So I was very fortunate to have stayed in touch with old friends from my investment job in London back in the day. The Samware brothers out of Germany, who are, probably the world's best entrepreneurs and investors in terms of internet, and done an amazing job with big businesses like Zalando, HelloFresh, and a whole variety of others. And we'd stayed in touch over the years, and I was afforded the opportunity to join Global Founders Capital right as it was sort of coming together 3 years ago.
That's really awesome. And what is Global Founders Capital, and what is the investment thesis?
Yeah, Global Founders Capital is a $1.2 billion global fund. We invest in promising entrepreneurs worldwide. We like to invest in folks who've done it before, folks who can articulate incredible visions, folks who have a level of authenticity to what they're going after because they're just so passionate about it they can't hold themselves back. Really, we want to be the most entrepreneurial investors in the world, rather than sort of call it standard finance asset pickers, because we ourselves have built businesses and are entrepreneurs.
It's something that I like to discuss on the show when we have investors. It's really that in the past and some years ago, this was this kind of the entrepreneur kind of begging, going to the investor and asking for an investment. And nowadays, it seems that there is much more capital available, and it's kind of the opposite. So the very good investors also trying to get in with in the business of the very good founders and trying to support them. Do you have any curious story about a company that you needed to fight a lot to be able to be part, to work with the founders and to invest in that company?
Yeah, I mean, one example would be an angel investment of mine in a company called Checker, which is a background check technology company. I was actually playing with the Handy product and looking at sort of the back end of the, call it, funnel in terms of recruiting professionals for the platform, and they evaluated a whole variety of different background check technologies, from Kroll to Sterling, a whole variety of others, and Checker was one that they decided to test out. It was sort of in beta mode still. The UI was easy. You basically slide someone's ID onto sort of a splash page, and within a very short period of time, your professional would be background checked. You get a result, versus with a lot of the other players out there, it took a lot longer. And inside of me, sort of there's this instinct that this is a meaningful and sort of needed technology, as kind of the on-demand economy was growing really, really quickly. So Uber, Lyft, all these different platforms were just exploding, and everybody needs to be kind of background checked. So I had a strong feeling for kind of what they were trying to accomplish. Right. I actually was traveling in Europe when I had this just kind of gut instinct that I needed to move on it. I needed to do something. I wanted to invest in it. I wanted to get involved somehow. I remember messaging the founder. He was a little surprised. He thought that I just wanted to, sign up and use the tool. for a couple of the
Right.
other businesses that we were advising and everything else. But he was also excited that I expressed I wanted to invest, but wanted to meet in person. So I flew to San Francisco the next week. We met for dinner. I think we spent about 3 hours. I speak French. The founder's French. We spoke, and it was like really fun. We connected. I told a whole bunch of stories. I think,
Helps a lot.
talked about ways that we could be helpful, hopefully plug them into Airbnb and a variety of other different businesses we were involved in. And then at the end of it, he offered to get me a drink somewhere else. We chatted and he shuffled around the cap table and let me in for a check. And that was really, really exciting because it took, kind of
That's a
multiple
great
steps
story.
to get there, a lot of effort, and he became a friend. So it's exciting.
That's awesome story. Thanks for sharing it. There are three main pillars that we always discuss on the show, which are about some of the ingredients that we consider critical to be able to scale successful. Those three are team and awesome leadership. Second is much more related with strategy focus and radical focus. And number three, much more related with execution, rhythms, habits. And starting with the first one, team, which is critical for any investor. You typically invest in founding teams. It's the first check,
Mm-hmm.
as you were saying before, from 500K to 3 million. What is important to you to see in a founding team when you invest?
I think authenticity around the vision that they have, meaning, you have to understand if they have that excitement that
Right.
makes sort of their vision almost a reality when they describe it to you. Um,
Mm-hmm.
if they use language that connotes, uh, ways that they'll construct it from, point A to Z,
Right.
and if they go in detail, then those are all really good signs. I think
Mm-hmm.
you also have to observe the chemistry between the team members, and I
Mm-hmm.
think get an understanding that they're friends, that they feel at ease with each other. Um, and we always understand sort of folks' backgrounds, like have they built something similar in the past, or sort of how does their history sort of dovetail with kind of that concept that they're going after.
Right. Right. And it's really, I believe that in terms of the personality of the founders, and especially of the CEO, needs to change a lot from stage of growth to another stage of growth. So I mean, getting to product market fit, from product market fit to 2 million, 5 million ARR, from 5 million to 10, from 10 to 20, 20 to 50, 50 to 100. It needs to be kind of a different person that needs to be transformed along the way, and especially bringing to the founding team another 3, 5, or 7 elements that will make the leadership team. So how do you help, and how do you see this transition moving forward from a founding team to leadership team, and then being able to change ourselves as the CEO to be able to cope with the pace of growth of the company?
I mean, I think there are a lot of different things that kind of come into play, but what I've observed
Yeah.
is, first off, leadership needs to come into play, i.e., the ability to, have employees and folks in a company, pursue kind of the goals that are laid out by the management team or the founders. And, that's not something that comes immediately to everyone.
Mhm.
In fact, to some people, it might seem pretty artificial. A lot of founders are, very product focused, and, they're just obsessed with creating something that they think the world will love. But then sort of that next step is making sure that, you have a group of people who sort of believe that and help push that as well. And so, that's an area where I think a lot of founders sort of focus in and kind of need to learn more. And then the
Got
second
it.
piece is data, and making sure that things are being tracked. And that tags along
Mhm.
with kind of the leadership piece. Leadership needs to ensure that a team, a business are sort of tracking towards specific goals, whether it be sort of revenue targets or ARR targets, or there are a million different KPIs you can slice and dice into a
Right.
business. And then, the third piece would be granularity around KPIs and granularity around that data, and really kind of looking at things from a nano standpoint, really seeing things kind of, to the kind of little lower layers, and making sure that nothing slips through the cracks, because every detail becomes more and more important as you scale.
Right. Very good point. And most difficult VP to hire?
Most
What's
important
your
VP
opinion?
to hire. I mean, I
Most
think it depends on the
difficult.
strength. Yeah, it probably depends on the strengths and the weaknesses of the management team. Because some founders can step into sort of sales roles better than others, in product roles, but others. So I think it's very subjective. I think it really depends on kind of the needs of the team, the skills of the team, how to fill out kind of those capabilities. I think from kind of a cross-section standpoint of cross-section of different geographies or different kind of sectors standpoint, in Silicon Valley, kind of your VP of engineering might be kind of the most competitive or difficult to find, because everyone's going after it.
Got it. Very good point. And in terms of focus, nowadays we discuss a lot in the industry. One of the most well-known articles from the partner of Battery Ventures, Agro, if I'm not mistaken on the name, who says that some of the outliers of the SaaS industry, like Salesforce, Marketo, ServiceNow, and others, kind of are aligned with the trend or with the pattern, which is the triple 2 times, double 3 times. They are able to go from 2 to 6 million ARR, 6 to 18 million, 18 to 36, 36, 72, and 72, 144 or 100 million plus. So in 5 years. What do you think about those kind of growth rates and growth expectations? That's what the industry is. There are companies that should grow a little bit slower. What is your expectation when you invest in a company? Is it really 2, 3x or even more, or it depends?
I mean, I'd say, it depends on the sector that the software is going after. They're really interesting sort of horizontal SaaS businesses, vertical SaaS businesses, and a whole bunch of other sort of categories of SaaS. But I think we're particularly excited about vertical SaaS, where you're building software to pull an antiquated industry sort of kicking and screaming into the modern world, an industry where everything is done on pen and paper still. And it's surprisingly, there are a lot of industries that are still sort of like that. If you look at like the freight industry, shipping industry, if you look at the agriculture industry, even sort of elements of automobile, and other industries that are sort of would seem modern and would seem sort of very well run. There's not a lot of software that exists. And with sort of vertical SaaS, what you end up doing is activating whole portions of those industries in one full swoop by providing that software. And so you grow extremely rapidly. And so I think it's totally feasible what he says. And I think that in terms of growth rates or whatever else, a lot of the metrics come almost immediately, because the software is solving such important problems and is being applied to such sort of broad use cases. For example, I mean, we're investors in a company called Cedar.ai, which is a commercial rail SaaS software business. And commercial rail it's a massive industry in the U.S. Berkshire Hathaway is an investor in several railways, etc. But a lot is still being done on pen and paper, and is very antiquated. And so Cedar is sort of activating all of it through software, and henceforth is growing kind of very, very quickly.
Very good point. And in terms of so your opinion is completely feasible, and it's much more about cracking a huge problem in a traditional industry that the software and the solution, the SaaS solution, is able to solve and to penetrate very, very quickly.
I think so, yeah.
And sometimes at this stage, there is something that is a little bit counterintuitive, which is to be able to double or triple, we need to open the avenues of growth and the variables. We should add more geos, more verticals, more how can I say, more segments, mid-market, small business, enterprise, and at a certain moment this will slow down, and it's exactly the opposite. We need to start understanding what we need to double down, and what we need to kill in order to grow quicker. So how to help the founding team or the leadership team at this stage to kind of have the courage to double down in a few variables instead of trying to go too broad? Or what's your opinion? Of course it depends.
Yeah, I mean, I think that kind of there can be synergies across multiple products that a startup builds. If there are no synergies, if they're disparate products, I think it's relatively it's useful to talk about how you almost need to build separate businesses for each of those kind of new categories. If they're synergistic already, I think maybe they're actually a good thing. I think it's case by case, and you really need to sort of dig in with the founding team.
Right. So very good point. It can be also something positive. Something that a lot of times happen is a scale-up that post-Series A or post-Series B raises a huge round and kind of splits up with the will to get the 2 and 3x growth, and sometimes revenue will not follow what was expected, and the burn rate and the cash flow starts becoming a problem, and then they slow down too quickly the investment, and they might be in need of raising another round pretty soon, and the metrics are not very pretty to go to another fundraising. So how do you see these moments where the leadership team panic? So investing a lot, being super aggressive after the rounds, and then kind of getting in shock because revenue is not coming as a consequence.
I can sort of very fortunately say that I have not been in that circumstance.
Cool. That's awesome.
But I think that it's always important to have sort of milestones around making sure that a product aligns with your cash burn, that you test different ways to drive revenue, and if certain ways don't work, then you kill those strategies and decide to not pursue them. I think in a circumstance like that, what I would do is I'd work with the management team to push out a whole bunch of different tests to understand what really drives revenue in a cost-effective way, and put a lot more capital behind sort of those strategies, because it sounds like in that particular circumstance, a management team's ineffective at driving revenue with the capital they have.
Good point. Let's move to, so we have discussed it kind of, in order to scale, we need to have the right people on the right seats, the right leadership team, the right founders, the right leaders. We also need to have a very clear focus and a very clear strategy, very well articulated, as you expressed it before. And then if we have the right team, if we have a clear strategy and radical focus, it's all about getting it done and learning as quickly as possible. And the rhythms and the habits and the rituals are pretty important. Nowadays in tech, everyone is doing one-on-ones, dailies, weeklies, monthlies, quarterlies, annual retreats. So what have been some of, and here you might bring also your experience as an operator yourself. What were some of the rhythms that were really important for you to drive alignment, to motivate people, to inspire people, to have everyone on the same page?
Yeah, I mean, I think that having kind of common goals that go beyond just kind of financial metrics, I think are important. I think having things that people really look forward to, whether they be offsites or sort of powwows, uh, conference calls, whatever, that brings everyone together, where you can describe kind of the bigger vision of the company, the opportunity to innovate across a massive industry, and really just to motivate people, I think, is an important ritual. I think team building activities are important. I think back at Airbnb, we would work with Friends of the Urban Forest in San Francisco, for example, and actually plant trees and spend kind of significant time together on a Saturday doing that. People had their hobbies, and those hobbies would bring others together. So a variety of people were DJs, and so there's a whole sort of music circuit kind of within the organization. I mean, I think things that sort of build culture are really, really important.
It's very, very good points. And I also wanted to get to know a little bit more about what are the differences that you see from being an operator, being involved as a co-founder of CityDeal, moving to Groupon, then Airbnb and other startups, and now being an investor. So, what was some of the mindset shifts that you needed to make in order to be a successful investor as well?
Well, I mean, I think sort of as an investor, you're actively supporting entrepreneurs, great entrepreneurs, and if you've done it before, then I think you can ask key questions that resonate with the founders. But at the same time, I think you have to be nuanced and thoughtful, and not expect that you actually know what's going on, because fundamentally you're still in the bleachers. You're not on the playing field. So I think it's sort of it's a juggling act to a certain degree, where you have certain information, you have certain hunches because of experience, but also you recognize that you don't know everything, so you have to listen really well. You have to be active in terms of your listening, and hopefully you end up collaborating with the founder. It ends up being they identify areas where you can be supportive, and you sort of fill in those gaps. And it's just sort of constant interplay.
Very, very good point. It was very interesting because when you were discussing and sharing a little bit your investment thesis at Global Founders Capital, and also what do you think is really critical on a team and on founders, you're talking about very specific words, and then you try to explain it very well. So the capacity to articulate, the obsession, the authenticity, the excitement to develop that idea, that they are able to go from the strategic spheres to operational sphere and go to the detail and explain everything going on. So how important is the total addressable markets and versus the team? So how do you balance the market size with the vision of the team in terms of investing or not investing?
I mean, I think it's very subjective. I think it's case by case. I think it really depends on a team and the market. I don't think that I don't think it's black and white. I don't think it's either ever. And I also think that there are founders who come up with sort of interesting ideas, but then decide to do something completely different 6, 12, 24 months later, and that ends up being like the big opportunity. So long story short, like I would just say it's very subjective. I think it really has to do with their passion and their energy, kind of no matter what.
Good. And if you would have to select, let's say 1, 2, 3 companies of your portfolio that you are the most excited about that will kind of disrupt industries, what names would you say?
See, I mean, I'm so excited about my entire portfolio. I have such an amazing portfolio and such great entrepreneurs. I can't really. There's not a single one that I like more than another. They're just I'm just really lucky. I think we've done investments in direct to consumer, in sort of e-commerce. Where we've invested in direct to consumer candles, a company called Otherland in New York, which is fantastic, really amazing, charismatic founders, fantastic business. And we've invested in a direct-to-consumer sort of barbecue grill business called Spark Grills, out of Denver, Colorado. Incredible, creative, engineer, founder. Really very exciting because there's a big open space for that in the direct-to-consumer world. We've invested in, I mentioned, sort of vertical SaaS businesses. You've invested in AI data entry businesses like Hyperscience in New York, which is growing extremely rapidly and has a fantastic, just absolute genius founder. We have just a very exciting portfolio.
That's really awesome, and we are coming to the end of the show, and with one of our favorite questions, which is, if you would be starting again and joining now Global Founders Capital, or if you would be able to meet Don at that time 3 years ago, what advice would you offer to him?
I think, again, my advice would be to make sure that you're trying to observe a founder's energy vis-a-vis what they're creating. And there's sort of textbook entrepreneurs, if you will, people who have put together really great models and sort of a scientific approach to building a company. And maybe they walk you through sort of building a business like a math problem. And they can be really fantastic if they have sort of that passion to go alongside all of the quote unquote work or the foundation that they've built. But in other cases, sometimes there's just more of a mechanical approach, and so you don't necessarily sort of get that passion, that energy from it. There are other entrepreneurs who come in cold and just tell a story, and they're so obsessed with the story, and you can tell that they're fingers in the finger slots and toes in the toe slots, and just totally, just completely obsessed, and they live in it. And those are, I think, very, very interesting founders to sort of get to know. There's a lot of different types of founders is what I've realized over the past 3 years. I think 3 years ago I probably had some assumptions around what sort of made a successful entrepreneur, and I sort of wish I had known a lot more, but some of those things can only be gained through experience.
Right. That's an amazing lesson for the ones who are joining and who are investing as well. Donald, it was really a pleasure to have you on the show. Thanks so much for making the time and sharing your experience with the community.
Yeah, pleasure is all mine. Thank you.
And to our community, thanks for being there. We keep here serving you, bringing the best people in the world, the best resources, so you can scale successfully from 2 million to 100 million ARR. See you soon, and keep scaling.